Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Tuesday, August 5th. In today's episode, I'll tell you about Elon Musk's new pay package from Tesla. Then, let's go over Berkshire Hathaway's earning results. The markets are coming off their worst week for the summer, with the S&P and Nasdaq both dropping more than 2% last week. And the main driver of that was the disappointing jobs report. Not only did that report show that July's jobs numbers were disappointing, but the report also revised May and June's numbers, meaning that over the last 3 months, the economy just added 35,000 jobs on average, which is way lower than what economists were expecting, and a sign that the labor market is showing signs of weakness. Let's take a look at what we have going on this week. We're getting a ton of high-profile earnings, including Palantir, AMD, Uber, Airbnb, Disney, and more. So it's another stacked week of earnings, and we might get a couple of trade deal updates as well, because remember, the new tariff rates go into effect on August 7th. Let's run through some headlines, starting with Elon Musk. The Tesla board just approved a massive $29 billion pay package for Elon to keep him locked in and motivated. This deal includes 96 million shares of Tesla that will vest only if Elon stays in as a key executive through 2027. So essentially, this is a 2-year, $29 billion deal. This new deal is Tesla's way of making good on that $50 billion pay package from 2018 that got struck down by a Delaware court earlier this year. In a shareholder letter sent out this morning, the Tesla board said this was a first step in reaching a long-term compensation deal, which they will bring to a vote at the November 6th annual shareholder meeting. And the pay package would gradually increase Elon's voting power at the company, which currently sits at around 13%. The board really wants Elon to just lock in and focus on Tesla. Don't get distracted by SpaceX or XAI, because right now, Tesla's core business is struggling. The vehicle sales dropped by 14% last quarter, and revenue growth has flatlined. There's also been some quiet rumors of Tesla potentially switching to a different CEO. But right now, the Tesla board and investors still believe that Elon Musk is the guy to lead them into the next chapter of the company, which includes full self-driving, robo-taxis, and humanoid robots. Let's shift gears and talk about Berkshire Hathaway. The Warren Buffett-led conglomerate reported disappointing earnings over the weekend, with operating profits dropping 4% in Q2, and it was dragged down by insurance underwriting losses. The other segments like railroads and energy were flat or just barely up. But the company's biggest hit came from their $3.8 billion write-down on their Kraft Heinz stake. That's a rare L for Warren Buffett. And Berkshire now values its 27% stake in Heinz at just $8.4 billion, which is less than half of what it was worth back in 2017. Buffett threw a little bit of shade at Trump's trade policy as well. He warned that escalating tariffs could have adverse consequences across most, if not all, of their businesses and investments. In fact, Berkshire was a net seller of stocks for the 11th straight quarter. They unloaded $3 billion worth of equities in Q2 and $4.5 billion overall in the first half of the year. This is all coming at a time when Warren Buffett is preparing to step down as CEO at the end of 2025. So yeah, the vibes are a little shaky over there, and the stock is down more than 3%. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Wayfair shares are popping this morning after the furniture e-commerce company posted its strongest quarter since the pandemic. Revenues grew by 5% year over year in Q2. And yeah, that number does sound kind of low, but for Wayfair, that's a major comeback. See, last quarter, revenue growth for the company was flat, and in 2024, sales dropped by 1%. On top of that, the company hasn't posted a profit in years, but all that has changed in Q2 report, and they have a surprising profit, and investors are jumping back into the stock. It's up more than 5%. On the flip side, Boeing stock is moving lower this morning after more than 3,000 workers in their defense unit went on strike in Missouri and Illinois. The strike began after the IAM denied the 4-year labor contract offered by the company. This is a big deal because Boeing's defense unit makes up around 30% of their total revenue, and it manufactures some of the most recognizable products in the American military, including the Apache helicopter. So this is more headache for Boeing to deal with as they try to turn around the company, and it comes just less than a year after thousands of Boeing employees went on strike in September of last year. And that strike didn't end until November of 2024. so I guess just a month long, but Boeing stock is down around 2% in reaction to this news. That's all for today's show. Keep navigating those waters. See you tomorrow.